Welcome back to the channel, or welcome to the channel if it's your very first time here. My name is Troy, and today I'm going to be going over the 66th update to the Anyone Can Invest portfolio. Apologies in advance for the delay in recording this. I don't know if you guys can tell, but my voice is still a little shaky. I almost got it sounded like I was going through puberty for the second time, but nonetheless, we are back for this week's episode, which is last week's episode. So we should be getting back-to-back Fridays or Saturdays, back-to-back weekends with ACI updates, which is nice to see. So if anybody is new here and doesn't know what the ACI or Anyone Can Invest portfolio is, simply put, when I first started investing, there wasn't any portfolios that I could find with a couple hundred or even a very few couple thousands of dollars in them, so I could see how these people were building these portfolios. Every portfolio I saw had tens of thousands or even hundreds of thousands of dollars, which was really cool to see, like, the amount of dividends they were getting at that amount. But it was also a little bit I don't know, I wasn't as motivated or inspired by it because I wasn't anywhere close to that amount of money. So I decided to make my own, starting from the ground up. Obviously, this portfolio today has a couple $1,000s in it, but you can go back and watch every single episode, starting with just the first $60 deposit. So I wanted to provide that for you guys. But without further delay, let's go ahead and see where we left off last episode. All right, guys, so looking right here, this is a screenshot of where we sat last episode. The things I want to draw attention to here are the ones that have the red boxes around them. So our cost basis total was sitting just under $330. So we do have a goal of $330 per holding. The total gain and loss all the way on the far right, you guys can see the stocks that were up the most, the stocks that were down the most, and how much they're up or down since they began. This is the all-time total gain and loss. Down at the very bottom, you can see the $4,624.73 portfolio value, as well as the $649.70 that this portfolio was in the green, which comes out to 16.43%. Again, that was one episode, which would now be about 3 weeks ago. So now let's go ahead and see where we sit this episode. You guys can see right here, we have the deployment of the $5 into each and every stock with the $60 invested on July 10th. And then we get into the imbalance. So with this episode, we are supposed to be at $335 per holding in all these stocks. Again, I do not drip the dividends for anybody new here because some of these stocks pay way higher dividends than others, and I don't want them getting out of balance. So I pull the dividends to a bonus investment. We'll talk about that in a little bit. So right here, this is the episode over episode momentum chart. You guys can see the tickers on the far left, then episode 65, which was the last episode I posted for you guys, and then episode 66, which is this episode, and the percent change since last episode. So again, I like seeing this. It's kind of crazy to me how much these stocks in my portfolio are moving on basically a 2-week basis. Obviously, self-explanatory. The ones in the red have gone down over the last 2 weeks in this portfolio. Not necessarily the stock has gone down, which in most cases it probably also has done that. But like how the position's doing for me in this portfolio, including all of my buys, this is how the position's doing all time over the last 2 weeks, if that makes any sense. So all the red positions, we have a couple that are down 3%, and then there's 4 stocks that were down 10+% in just the past 2 weeks. Or our gain or loss in the position has gone down 10% plus in the last 2 weeks, if you want to word it like that. None of them have, only one, AVGO, Broadcom, has gone up 15.35% in the last 2 weeks. And then the other ones are all, +2, +3, +4, +5 kind of things right there. So again, I like looking at this chart. I think it's pretty cool just to see the momentum of, the last 2 weeks. Again, this is all weird because this isn't a 2-week cycle, because I was, sick, if you want to call it that. So, all right, this video right here is our lifetime momentum. This is basically what I was just showing you with the momentum chart, but this is it in motion on an episode over episode basis. So the last chart was obviously showing just the difference between last episode and this episode. This shows you how they've been doing since I've held them, the ebbs and flows. I don't use ebbs and flows anywhere else except for this, I don't know, maybe the YouTube channel in general, but for sure this series. But nonetheless, there's that video putting it in motion for you guys. If you guys want to, go back and watch that or speed it up or whatever, that's up to you. Next up is the best and worst performers. So this is the current standing of the portfolio. I try to block out the information that I'm not going to talk about or that isn't as important. If you guys want to see that, I can start putting it back in the video, but this is like the more streamlined, simplified version. of that information. So biggest winner is Broadcom. I have 1.583 shares, a average cost basis of $211.48. This position's up $298.38 or 89.13%. And the good news is this one has more room to run. You guys can see on that 52-week range thing. We're almost basically in the middle of the 52-week range, which means, it's not, trading the highest it's been over the last year, and it's not trading the lowest. It's right in that sweet spot. So we have room to run both ways. So it could go down a lot more and still be within that range, or it could go up a lot more and still be within that range too. So, and it's not like a limit range, right? Like it can obviously go outside of, what is that, 495 is the top end of the 52 week. It's not like saying, oh, Broadcom can never be worth more than that. It's just saying over the past 52 weeks, it hasn't been worth more than that. So now our flip side of that is the Intuit is our biggest loser. We have 0.59 shares, so a little bit more than half a share. Average cost basis is $566.14, which means we are down $171.80 or 51.44%. And you'll see this one is at the bottom of its 52-week range. So it's doing the worst it has. The top of the 52-week range is $813. So if we can get back to there, our cost basis is looking really good on there. So again, we don't worry about, the ups and downs of each stock on a bi-weekly basis. We just keep buying, adding our $5, and, hopefully everything evens out and gives us more money than we put in at the end. That's investing. So down at the bottom, the account total sits at $4,612.91. We are in the green by $574.83 or 14.32%. So a little bit of a pullback from last episode. That's because we had, 4 stocks that were down 10+% over the past 2 weeks. So that doesn't help. Next video is this full portfolio performance. So this is the total portfolio. So the other video that we watched was the stock by stock breakdown and how they were doing episode over episode. This one is just the total portfolio, the ending number that I just read you, that plus 14% I think we are right now. That number will be here at the end of this video, but this is just how the portfolio was doing every time I recorded what was the end point of that. And you guys can see, obviously, we had some down weeks and we had some up weeks. So that's just part of investing. The idea is not to get too high or too low, literally, and just stay the course. You want that trend to keep going up into the right over the long run. So like I said, we are $574.83 with more money than we put in there. So that's nice to see. Next up, this is the passive income since last episode, not including anything that's happened in the last week. I haven't even looked at the portfolio over the last week because I don't want to spoil anything for the next episode for myself or obviously for you guys. So this is as of last Friday is when I took this, which today's the 18th. So Friday would have been the 17th. So July 10th, if my numbers are right. So we've had technically 4 dividends come in because the SPAXX it's a reinvestment of the cash that it gave me. So it's giving me money and putting it back in the same spot it was. So first up on June 30th, we had Broadcom pay us $1.01. You guys can see this chart. We had that $1.01 down at the bottom, which is more than the last dividend, which is more than the last dividend, and so on and so forth. In total, Broadcom's now paid me $6.04 or 7.74% of the dividends paid in this portfolio. Next up was that SPAXX. Again, this isn't really a position that I'm holding in the portfolio, so I don't want to go over the complete breakdown of this because it's not something I invested in, if that makes sense. So right here, it's a simple chart. So you guys can see so far in 2026, we made 43 cents in interest. Again, I'm not comparing that to 24 or 25. 1, the interest rates are different, and 2, it's not a position. That's not a dividend growth position. So anyway, in total, we've received almost $3 for free just by keeping our money in the account. Which is 3.82% of the total money received in this account. So again, it's just a nice little cherry on top. Next up on July 2nd was PHM or Plute Group. This one's paid us 72 cents on July 2nd, which again is more and more and more than every dividend prior to it. It's the highest dividend ever so far for this one. Plute Group's now paid us $3.55 or 4.55% of the total dividends received in this portfolio. And lastly, but not leastly, July 10th, the day I got all this information, we received a $1.23 dividend from Steel Dynamics or STLD. Again, you guys can see us more than every single dividend, and every single new dividend we get from these companies should be the record. It should be a PR, the best dividend we've ever received, and it only gets better and better over time. So Steel Dynamics is now up to $6.78 or 8.68% of the total dividends received in this account. So I'm not going to make you guys add all these up. Let's go ahead and we're going to close out June and show where we sat as of a week ago in July with this chart right here. So again, I'm trying to blur out like all the information so it doesn't get too fuzzy, no pun intended. So again, concluding June for 2026, we finished with $2.73, which in that little light orange box is 67.5% higher than June of the prior year. So that's, again, the growth that we're looking for there. The next light orange box below that, the $10.11, is how much we received for the quarter two of 2026, which is 78.6% higher than what we received in quarter two of 2025. Then we get to where we are in July so far. You guys can see we're at $1.95, which is 21.1% lower than what we made in all of July for 2025. Again, this information was basically as of the first week and a couple days of July. I already know we received a couple dividends. I didn't see, I don't remember who it was from or how much it was for, but we did receive a dividend already since I gathered this information. Maybe that puts us even or even above what we made in July of 2025. We'll have to see next episode, which should be coming out around next weekend time. Worst case scenario, next Monday, that episode will come out. So, anyway, so again, we're down here at that bottom. The second to last red box we have on here is the quarter sum for quarter three of 2026, which obviously just started. We're at $1.95, which is currently 71.2% lower than all of quarter two of 2025. Again, not only did the month just start, but the quarter just started. So we're not worried about the negative numbers now. All we want to do is see positive numbers at the end of each month from the same month the prior year, if that makes any sense. So down here at the very, very bottom, the total, we're now up to $38.37 for the year of 2026, which is $3.20 every single month, 11 cents per day, and already 18.2% higher than all of 2025. The January through December of 2025, we're already 18% higher. We just started the second half of 2026. So very good progress so far, and I'm excited to see what that number ends up being, because as I've talked about before, and as you guys might do with your portfolio, that number that I set this year is the new number to beat the following year, and we see how quickly we can do so and by how much we beat it by. So all exciting stuff there. Next, let's go ahead and get into the bonus investment real quick. So bonus investment is simply put, again, I don't reinvest the dividends. I let all the dividends pull up, and then once I get to one full investment, which is $60, I'll take bonus $5 investments and put them into each stock just to help them grow that much faster. And they're all growing at an even pace at that point as far as like the money that I put in them. So the current passive or projected annual dividend income I create from this portfolio is $43.57 per year, which comes out to $1.68 every single biweekly period. So basically every episode. Current cash was sitting at $23.41. Our first bonus investment was completed on January 9th of 2026. Our new projected bonus investment date sits at 5/17/2027, so May 17th of next year, which is 493 days after the first bonus investment. Obviously, 493 days is more than a year because there's 365 in a year. So this next chart shows that the first bonus investment actually took us 724 days to reach, because obviously we're just getting started, small amounts. It takes a little bit of time to, pick up the snowball, as we refer to. And now that if everything holds exactly the way it is and there's no more progress for the rest of, the year and then some, it'll only take us 493 days to reach the next one. This should continue to keep trending down, and we're going to keep getting new dividends and keep making more money and get dividend raises and stuff like that. I don't know if we'll be able to get it to the beginning of 2027 like I wanted to, or maybe even the end of 2026. But I'm putting in the same amount of effort. Like I'm trying, as much as I can. I'm not changing any of the numbers or things that we're, adding to the portfolio, but nonetheless, 493 days is still way quicker than 724. And the next one will be even quicker than the 493, and so on and so forth. So it will be, I'm willing to bet, I don't bet, but I am willing to bet it will happen before May. I'm willing to bet it won't even happen in April. I'm thinking maybe worst case scenario sometime in March of 2027, but we'll see. So, and then this chart, I don't know if it's been on the screen the whole time or it's going to pop on the screen, 4 seconds ago, but this last 10 episodes projected bonus investment dates. I really got to work on names for these things, but anyway, that's exactly what this thing's charting. So it shows you way back in episode 56 where the bonus projected investment date was, and then where it is now. You guys can see the trend line. We're now back on the trend line, and hopefully we can, ebb and flow our way down to a quicker and quicker date. So we'd like to see that. So right here, last thing we're going to talk about is what's coming. So again, you guys can see I took this screenshot on the 11th, which is when I planned on recording the video, but I lost my voice for fun. So I don't know if it's allergies or I got sick or something. I felt fine. throat hurt and I couldn't talk. So there was that. But nonetheless, we had, it looks like we did get paid from Intuit. So I was right. We did receive a dividend. That was actually Friday, which as of the time of recording was yesterday. We have X dividend dates. I didn't have this open because I'm slacking again. Let me see. So yeah, Intuit's going to pay us on the 17th, technically already paid us. And then the next dividends we have, it looks like it's ALG on the 29th and then Humana on the 31st. But we do have some X dividend dates if you guys are into that stuff. So the X dividend dates that passed was AbbVie had an X dividend date on the 15th. ALG was on the 16th. Earnings for STLD are on Monday as of the time of recording. Earnings for KNSL are on the 23rd. We have earnings on the 28th for PHM or Plute Group. 3 sets of earnings on the 29th. You have CSL, Humana, and ODFL. And then on the 30th, we have earnings from AbbVie and MasterCard. So there's that. Concluding the episode. Again, I apologize for not being able to get this out. I don't know if you guys heard any cracks in my voice. I'm not really... First time I was getting cracks in my voice back in puberty, that was embarrassing. This is just like, hey, we'll see what words come out and which ones don't. So again, I appreciate you guys sticking around. I really hope you guys enjoy this series. Stay tuned. It should be next weekend or at worst the following Monday, which looking at my calendar, the following Monday would be the 27th would be the next episode, would be worst case scenario. So again, thanks for sticking around with me. If you guys enjoy this series, make sure you guys are liking, make sure you guys are subscribing, ringing the little bell so you guys don't miss when these videos do drop. And until next time, see ya.